Hello there, I hope that you're doing well. Welcome to this new topical lecture. During this lecture I will be discussing earnings season, navigating the volatility. I will walk you through the full daily delivery of the day of Wednesday, and I'm going to outline to you how I was able to trade it the way that I did. Here on the daily chart of Nasdaq, and first of all it's important to note that we are at the time of this recording in earnings season. And what earnings season basically means is that the majority of imported companies within the US will be releasing their earnings. And these earnings releases are very important because when these major companies release their earnings, that provides smart money the opportunity to inject a lot of volatility into the markets. When we pay attention to this daily delivery, what I would like you to see is that we saw the market expand towards the upside and we saw this daily BC getting created. We then saw the market consolidate for a bit, and then eventually we saw the market open low. And do you see how we just traded below that daily imbalance? It's a very tiny imbalance, but you see that we just traded below it and then expand towards the upside. What I would like you to understand is that the reason that this occurred was because the drawing liquidity was this buy-side liquidity pool, which was the high of the current month at the time. Therefore, this was our drawing liquidity on the upside. Notice that this lines up in close proximity to the 20,000 price level right here. When we then drop into the hourly time frame, what I would like to see is that throughout Friday, Monday and Tuesday, we saw the market consolidate and slowly grind towards the upside. Whenever the market is being repriced this slowly towards the upside, a lot of sell-side liquidity is being engineered below the daily lows. This sell-side liquidity is being engineered in the form of trendline liquidity, where you can see that every single retail-minded trader is looking at this delivery through the perspective of, hey, we're in an uptrend, we should be buying Nasdaq, we should be going long. And that's exactly how liquidity is being engineered below this trend line right here. Then on Wednesday, we see the market open up and initially run higher. We then have this sudden drop towards the downside in advance of the regular trading hours, which begin at 9:30. I will discuss more about regular trading hours in a bit. But what you can see is that we have this very sudden drop lower. This sudden drop lower is manipulation which is taking place, where you can see that sell-side liquidity below these lows is being taken out. We see the market trade below the daily BC, and eventually we see a swing low formation before the market expands towards the upside beautifully. Now inside of this delivery, it's important to understand that when this daily low forms, that is where buying opportunities are being presented on the lower time frames, and this is where I engaged. Now, when we pay attention to intermarket relationship, then on the left you can see Nasdaq and on the right ES. You can see that at 10 o'clock we had high impact news, and therefore your eye should immediately be drawn towards the 10 o'clock hourly candle. The 10 o'clock hourly candle is this candle right here, this opclose candle. What I would like to see is that when you pay attention to the lows in particular, what you can see is that Nasdaq took out this previous hourly candle is low, whilst ES created a higher low. And that is SMT, guys. That is SMT relative to the previous 90-minute cycle. I hope I didn't confuse you there. Listen closely. On the hourly chart, I'm using it as my higher time frame because I prefer the hourly chart. It's just for visual preference. However, I'm looking at the delivery through the lens of 90-minute cycles. At 10 o'clock, the final 90-minute cycle of the New York morning session begins, which lasts until 11:30. Therefore, when 10 o'clock opens up, my eye is immediately drawn to where the previous cycle low and high are. What you can see is that the previous cycle low gets taken out with this news release, and we then see SMT be unfolded. This SMT is the SMT which set up the daily low formation for the market to begin expanding towards the upside beautifully, because post-market there were very important earnings of both Microsoft as Meta. Do you see how the market kept on expanding higher after we already traded above this buy-side liquidity pool? That right there shows that the market is in a rush to get somewhere. Now it's important to note that this right here is our original consolidation, sell side of the curve, buy side of the curve. It all comes back to market maker models. So if you do not understand market maker models yet, I highly suggest you to go back to my lectures in which I touch on them. Now, before we dive into the lower time frames, I just want to share the following with you. Here on the hourly chart, and what I have outlined to you is I have outlined specific 10 o'clock hourly candles. And what I would like to see is that Nasdaq formed the low of day at the 10 o'clock hourly candle. When we go to the left then and we pay attention to what happened on this Thursday right here, you can see that we formed the 10 o'clock hourly candle with this up-close candle. If we pay attention to Wednesday then, what you can see is that the day prior, the 10 o'clock hourly candle formed here. So what you're seeing is that this is step that in play, where you can see that at the 10 o'clock hourly candle of this particular day, price is being referred back to the previous 10 o'clock hourly candles. And do you see that the market is then allowed to begin expanding towards the upside? This shows alignment in time and price. Now, if you pair this with the understanding of the bullish order flow which was in play, you can see clearly that this whole consolidation right here had one function, and that was to both engineer sell side as buy side liquidity. And therefore, when the market eventually drops lower suddenly like this, we take out sell side liquidity at first, we refer back to key price ranges, and from there we see the market eventually turn around to draw towards the opposing side of liquidity, buy side liquidity. Here we are at my Telegram post, or the mentorship forum post on Telegram, whatever you want to call it, throughout this day. What I outlined was that I was monitoring if ES will catch up to Nasdaq by creating new record trading hour highs. What I would like to understand is that the record trading hours begin at 9:30 a.m. and they last until market close. If both Nasdaq and ES would make higher highs, that would signal to me that I would anticipate higher prices for the whole day. If ES would not catch up to Nasdaq by creating a new record trading hour high, we might see consolidation or price might even roll over. Therefore, it was crucial that I saw both Nasdaq and ES begin expanding towards the upside. Now, please keep in mind that the time on my post right here are in local time, Dubai local time. Then therefore you must understand that this must be converted, of course, back to New York time always. So I apologize if that might confuse you a bit. Now, what I would like to see is that after this post, I posted that the regular trading hours are all delivery after 9:30 until market close. And I outlined that I partialed on longs once ES still did not create a higher high relative to that regular trading hours high, whilst Nasdaq already was creating higher highs. So what I was doing there was I was actually taking profits because I was not a fan of how slow ES was. Between 11 to 11:30 a.m. I had to see ES catch up, because the moment that I would see ES catch up to Nasdaq, that is when I anticipated, yep, we're in fact going to continue expanding towards the upside. Let us pay attention to the 1 minute chart of Nasdaq. We'll look at intermarket relationship in a bit. Here on the 1 minute chart of Nasdaq, and what I would like to see is that at 8:30 a.m. we saw the market expand towards the downside heavily. Do you see how the market repriced lower quickly? It then began consolidating right here. And then at 9:30 a.m. we saw the market expand lower, but then we saw repricing higher occur. Do you see how we traded above the 9:30 open right here? This high is very important. We'll get to that in a bit. We then see the market expand towards the downside, and notice that the red boxes from that RE chart, which represent those previous 10 o'clock RE candles, get reached. We see the market retrace higher, and we see this high getting formed. We see one more push towards the downside, and notice that we see a CB being created right here. At this moment in time, the low is however not in yet. Why not? Because we're waiting for that 10 o'clock high impact news. We're waiting for that new 90-minute cycle to open up. What you can see is that right here at 10 o'clock, that high impact news gets reached. Do you see how we open up, initially drop lower, take out the previous 90-minute cycle is low, whilst ES didn't, meaning ES created a higher low right here, as we've already seen on the RE chart. Therefore, that is 90-minute cycle SMT which is being established inside of points of interest. Therefore, I'm monitoring how price is going to deliver afterwards. We see this imbalance getting created. And do you see how this imbalance gets created inside of the range of that previous CB which I had mentioned? We see the market consolidate inside of that BC. And do you see how it just keeps on tabbing it right here? Do you see how the bodies do not even close inside of that range? That's an important signature by IPDA, because it shows to you that there's a certain rush for the market to begin running soon. So what I'm waiting for is I'm waiting for the market to indeed begin spooling towards the upside, because that's when I want to position myself long. I don't want to position myself wrong inside of time distortion. I want to position myself wrong when I anticipate that we're going to see that quick low resistance liquidity run towards the upside. So when the market reprices away from this imbalance and from those step down ranges, you can see that we form this very tiny imbalance right here. Do you see how the market reprices above that high which I had mentioned right here? We see the market retrace into that imbalance. And again, pay attention how the market just steps it and immediately leaves the imbalance. We see the market eventually begin expanding higher, but notice that at this moment in time, I've already positioned myself wrong. Why? Because we are displacing towards the upside. We repriced above the high, which set up the smart money reversal. And as I've told it to you, there's a change in the state of delivery. Premium rates on the left side of the curve failed to be utilized as resistance on price. So that shows that the underlying order flow is beginning to change. We see the market reprice higher, and notice how the market reprices above this imbalance on the left side of the curve. This imbalance will function as an inversion for value gap. It will function as a support range, so to say. So that is again a potential buying opportunity, and this is where I pyramid into my position. We see the market expand higher, and notice that the market eventually reaches this red box, which was this all-top close candle. The reason why this high is important is because it is the high which formed shortly after the open at 9:30. This is the high from 9:30 to 10 a.m. Do you see how the market initially rejects it right here? We see a retracement taking place into this imbalance right here. And then the market eventually begins expanding through it. At 10:30 we see open high taking place, and that is where I decided to take a partial, because ES was not following along with Nasdaq just yet, and therefore to avoid having to sit through a lot of consolidation, I secured profit. We see the market consolidate throughout 10:30 to 11 a.m. and the market is just finding support again and again inside of the range of this upclose candle. Now it's inside of this window of time that I outlined I need to see ES begin catching up to Nasdaq soon. Meaning I need to see ES begin running above this regular trading hours high up until that point as well. Because that would confirm to me that my overall higher time frame analysis is in fact correct and we are in a buy program. At exactly 11 a.m. we open up and immediately begin expanding towards the upside. It's at this moment in time that ES also created a new high for the regular trading hours. But we'll look at that in a bit on intermarket relationship when we compare both Nasdaq and ES. Notice that the market expands higher and we see it reach a buy side liquidity pool objective. What high gets met? This high right here gets met. This high is important because it formed inside of this CB right here, and we still had room to trade into this CB, as you can see right here. Therefore, that's a good buy side liquidity pool objective to target. That is where I partialed. We then saw lunch eventually begin to open up at 11:30 a.m. and notice how the market just consolidated. It just went back and forth, back and forth. But do you see how the market stopped in advance of the weekly open, this orange line? Meaning we did not reach the weekly open yet throughout the regular trading hours after 9:30 a.m. We are bullish, we're anticipating higher prices. The sentiment or the underlying narrative has changed from bearish to bullish, as we were outlining throughout these past couple of weeks. If you are listening to this review months later, I really suggest you to go back to the reviews up until this moment in time and pay attention to the overall narrative which I was outlining. I was bullish on the higher time frames for the indices, and therefore this week open to me is a draw on liquidity. The fact that we stop in advance of that throughout the launch cycle is perfect engineered buy side liquidity right here. Eventually we see the market drop lower and we see more drop taking place. 1 p.m. opens up, which is the second 90-minute cycle, and we see the market open up and immediately begin dropping lower. The launch cycle low gets taken out, and do you see how the market reprices higher than trading above the CB, which got created whilst we repriced into that launch cycle low? This CB has an inversion for value gap, and therefore this is again a potential buying opportunity. I'm still holding on to my long position from the morning session. And what am I targeting as a final objective? The weekly open. We see the market expand towards the upside and notice that it trades above the one cycle high. The reason why this is important is because from this moment in time, we are anticipating that the one cycle high will have to function as support on price in order for the underlying order flow to remain bullish. Do you see how we create an imbalance whilst we reprice above that one cycle high? That is one of those key algorithmic signatures which you can be on the lookout for to confirm that a specific time cycle with respective high or low is going to function as support or resistance. The market consolidates even more. And why is it consolidating? It's consolidating to engineer more buy-side liquidity above these highs in advance of that weekly open. We see the market open up at 2 p.m. then, and notice how we see open low taking place. The market keeps on trading inside that one cycle high, its up close candle right here, and eventually we see SMT be established. That SMT was very important because 1 minute later, what you can see is that the market expanded higher significantly because an important announcement was made with regards to the America and China trade deal, which is currently being developed. Isn't it interesting to see that the algorithmic signatures which I'm teaching to you are present in advance of such an important announcement? It's almost as if there were entities that knew at what moment in time that announcement would come, right? Think about it. So here we are on Nasdaq and ES, and as you can see, I have put them together through the perspective of regular trading hours, where you can see that the delivery begins from 9:30 a.m. Notice that we had a huge gap lower right here for the regular trading hours. What is important to note is that we saw Nasdaq front run ES right here by trading above the regular trading hours high, which got formed between the first 30 minutes of regular trading hours between 9:30 to 10. That means that Nasdaq is more bullish. It's in a rush to get somewhere. What is in a rush to get to? To that higher time frame objective, which we saw on the daily chart. Notice, however, that ES did not trade above this high just yet, meaning ES was consolidating below it. The moment that ES, however, traded above that high, that confirmed that the whole day we would be expanding towards the upside. This is where the trending day got confirmed, and this occurred exactly at 11 a.m. And when you pay attention to my market updates, which I had outlined and which you have seen a few slides prior, you will see that the moment that we would see Nasdaq and ES move in tandem with each other, that is when we would confirm the bullish day. When should this occur? Between 11 to 11:30 a.m., the final 30 minutes of the morning session. All in all, beautiful bullish day, and this is definitely a day which I suggest you to investigate in great detail. Pay attention how I utilize the higher time frames to confirm that we would see expansion towards the upside, and how I utilize the lower time frames to in fact align myself with IPDA. With that being said, this lecture comes to an end. I hope that you found it insightful. I hope that you were able to gain some golden nuggets from it. I want to wish you good luck in your studies, and I look forward to speaking to you soon again. Be safe.